Basically, today, the ECB comes out, post-Powell, sounds more hawkish, kicks back at this idea that we are going to be seeing cuts coming through. Apparently, we didn't even discuss cuts at the ECB Governing Council meeting. The market, though, a little unconvinced, I have to say. Joining us for his reaction to what we saw today, the former ECB chief economist, Peter Praet. Peter, always a pleasure to get your analysis on what happens at these events. What did you make of today? What did you make of the hawkish message that we got from Christine Lagarde?
I would call it moderately hawkish. So I think it's quite a logic sort of reaction. Christine Lagarde said that the Governing Council didn't discuss cuts of rates, but I mean, the issue was prominent, in the discussion. I mean, what happened yesterday with the Fed communication, the impact on markets was substantial, as you know. And so the aggressive, market expectations about rate cuts in Europe have been confirmed, actually consolidated by the Fed's own communication. Mm-hmm. So that's a bit embarrassing from the ECB point of view. So Christine Lagarde tried to push back against, but without much success so far. It's true that when you look at the projections now about inflation, they look very similar, actually, to the US Fed. If you look at the dots in the US and you compare with the staff projections, they're not substantially different. Mm-hmm. But there is one difference, actually, and Christine Lagarde insisted very much, it's wages. While we see wage moderation in the United States, so the trend is very clear in the US, you don't see that yet in Europe. It's the beginning. So basically the message is to say, wait and see. We are going to have more information, in the first 2 quarters of next year about basically wage negotiations, and then we will see.